afternoon, everybody. Welcome to your Tuesday edition of the TraderMerlin show. Obviously, you guys probably saw tons and tons of news regarding this leaked document from the Supreme Court versus Roe versus Wade. And it's funny, I've received more questions about my opinions on that versus opinions on the market. So I will abstain from my thoughts on that. I think obviously it's going to create some crazy moves in the market. I think you'll see tons and tons of protests going on if, in fact, these quote-unquote leaked documents turn into reality. Although, you got to look at it from the donkey of the day perspective. Somebody's probably going to lose their job or potentially worse for leaking this document. So I have to give the donkey of the day out to whoever leaked that Roe versus Wade, I guess, opinion from the Supreme Court about what they should be doing going forward. Now, if this does change, I guess we'll have a discussion on it at some point. But at this point, let's just leave it alone. And I don't want to polarize you guys. 'Cause I know what happens is on these types of situations, you have one side of the party that is, or one side of the population that is generally very in favor of Roe versus Wade, and then the other side is very against it. And if as soon as you align yourself with one side, the other side hates you. So I'm not gonna jump into that one. I'll leave it all alone. No Speedo today. Let's see. I really want to talk about what's going to happen tomorrow. Today really wasn't the most exciting day. You saw some nice downside moves in crypto, but the equity indexes were not that exciting. So let's talk about the calm before the storm. The storm is actually going to be happening tomorrow. That's going to happen tomorrow at 11 a.m. Eastern Standard Time, or sorry, Pacific Time, excuse me. 11 a.m. Pacific Time is when that announcement happens. That will be the FOMC Fed Funds Rate announcement. And then at 11:30 Pacific Time, you will have their press conference. Now, for me personally, I love these types of days, but I'll walk you through two listener questions here, or comments, and then I will dive deeper into specifics. So here's the first question. Came in from Tim. Tim, thank you so much for sending this in. Of course, anybody who wants to send in questions, you can put them down below the YouTube video or send them in at TraderMerlin@gmail.com. Now, how do you typically trade a Fed rate announcement? From Tim. I will tell you how I used to trade it, and then I'll tell you how I trade it now, because in my opinion, it's been an evolution for me. When I was on the old trading floor days, we're talking back in the late 90s, and even when I went over to Europe in the early 2000s and was trading over there, when I had an FOMC announcement day like this, I would be there the second that announcement came out, and I would get whipsawed, because as you guys have seen many times in the past, when the FOMC makes an announcement, it will scream down. It doesn't matter whether they raise rates, keep rates the same, or lower rates tomorrow. It's going to have a huge swing one way or the other, and then it will usually rip back the opposite direction. So for me, I used to get caught on those a lot. Now, I know this sounds very condescending, but I'm probably faster on a keyboard at executing than the vast majority of people that exist in financial markets. I spent my first 3 years of trading just hitting keys all day long. I set up my keyboard to be hotkeys, so I can hit a button and instantly buy and sell, as opposed to putting in my price, my stop loss, my order entry, my limit price, all that. I didn't have to do any of that stuff. So for me, I'm faster, so it was okay to trade those kind of volatile announcements, but I would still get whipsawed because it moves so fast. So how do I trade it now? Moving forward from my frenetic trading 550 trades a day to now just doing maybe a couple trades a day, very different strategy. So let's go look at the market, and I'll kind of map out what I'd be looking for tomorrow on the S&P. So here is our S&P 500 over the past, we don't even need to go back that far, at least for me to show you kind of how I would set these things up. Basically, what I'm going to look for is I'm looking for zones that are a significant distance away from current price, where I believe that the hype will whip it to. And what I mean by that is, let's look at a level that's higher up here. And I know I've got all kinds of lines on this chart. I apologize, but I have to leave those ones on. I'll put this let's make it blue, just so we can distinguish between my other lines I got on the screen. So there's a nice little blue line. Call that blue. Okay. Now let me add another one. And I'm going to put one down here. All right, so if you look at the blue lines, and I'll put this green line right here at current price. I think you guys can all see that it's relatively equidistant, right? It's kind of in the middle of that range. And you ask yourself, well, how far is that range to the up and to the downside? Well, we can just do this. That's roughly 3% to get to that top line, and to get to the bottom line would be roughly, it's snapping. Let's not snap off. Be roughly about 3% in either direction. So I guess I could ask you guys, how many of you think that the S&P 500 is going to move 3% in under 60 seconds on the announcement tomorrow? And feel free to type it in the chat. I want to see what you guys think here, because tomorrow is a very powerful day. Remember, we have not had a 50 basis point increase or decrease going back, I believe, if I'm not mistaken, back into 2008. It was shortly after I was kicked off of CNBC. They cut I think 75 basis points pre-market one time, and then did another 50 basis points during the trading session. So do you think that the market can move 3% in 60 seconds? Remember, this is a biggie. This is one that not only is going to jack up the cost of capital for everybody in the world that's consuming US dollars, but it also puts a lot of pressures on businesses. And, if we get something that even surprises at 75 basis points, you'll see even more whipsaw. So let's see. And it's fairly even. And again, there is no right answer here. It's all an opinion. So Randall says no. Glenn says no. Big Eb says no. Les says no. Jimenez says not 3%. Alan says 4% down. Quite possible, and then bounce around a bit from Doug. I don't think 3. Okay, perfect. So here's how I trade these ones. I'll be honest, I'm really not looking to get in tomorrow. What I'm looking for personally is preying off of fear and preying off of greed. So let's say, for example, tomorrow we get an announcement that all of a sudden it rips up and does hit this 43.03 mark. I personally don't think that if they raise 50 basis points, it's going to jump to 43.03. But what we will see are these crazy ripping tails to the upside or to the downside. So I personally would set up trades where I'm either doing limit buys at 40, let's say 4,050, or I'm looking to sell short at 4,300. And the only reason I'm doing that is because I don't believe that it's going to hit those numbers and stay there. I think it's going to have a reaction to spike up and then come right back down like it normally does, or vice versa. It's going to shoot down aggressively, freak the hell out of everybody in the market. I mean, literally, CNBC's going to be going, oh, crap, we're down 3%. And all of a sudden, it come ripping right back up. So I personally think 50 basis points is priced in. It would surprise me to see, much by the end of day tomorrow, a huge difference between the opening and closing price. But I think intraday, you're going to have long wicks. Let me see if I can draw some pictures here, because I do like to draw pictures. Let me put, where are we at here? We are down by this question. So let me add in a slide here so I can draw you some pictures. So here's what I think you're going to end up seeing tomorrow from just a pure price action piece, right? You have the market I don't know why this does this one. There it is. Okay, so let's say the market's trending down or just kind of chopping sideways tomorrow. I'll have an order to sell short way up here to supply zone or way down here at a demand zone, right? And again, it looks to be right around 3%. What I'm expecting to happen is this. The market will just go wham, wham, and then probably do this. That's my expectation of what will happen tomorrow. Maybe not the big sell-off near the end. So I think at the end of the day, your candle, let's get rid of some of this. Let's say the day ends right about here, and then it starts to drift down. So your end-of-day candle is going to look something like this, in my opinion. There's a red candle. You can have this monster tail on the top. You have a pretty big tail at the bottom, and I think that's what your candle is going to look like at the end of the day tomorrow. So I have no 100% concrete, definitive answer. All I do now during these announcements is I'm trying to prey off of the extreme greed and the extreme fear out there. Now, there's two things you got to pay attention to, especially for anybody who's never traded a FOMC announcement. Normally what you get is that opening 5 to 15 minutes after the initial announcement. That's when you get these unbelievable, just ridiculous jaw-dropping swings, which I guess you could potentially call that your popcorn trade of the day if you want, which is going to be the indexes are going to look just like that chart in the background. Let me see if I can replay that one just so we can see it won't let me replay it? Huh, that's weird. It's going to have that huge spike and then level out and look just like that chart in the background of our popcorn trade of the day. I just don't know why it didn't show. There it goes. Boom, boom. That's what I want for tomorrow, and hopefully I will trade off of that. I don't really want to be going long. I don't really want to be going short tomorrow. I really want to wait after these announcements to see what the direction becomes. So what you'll see in the opening 15 is that huge whip. Then it starts to gain some direction, and actually, where, in my opinion, where the better trading is once it gets that whipsaw stuff out of the way, you should start to see a trend form. The only asterisk to that statement is at 11:30 Pacific time, that's where Jerome Powell will be fielding questions from the general public and from the media. And at that point, you might see a change in direction based off something he may stumble on or leak or give more clarity to the FOMC going forward. So that's in a nutshell for Tim, that's how I'm trading it. I'm just going to sit there with limit orders way outside the market. If they get hit, they get hit. If they don't, and again, these aren't going to be big positions, so I'll probably be doing it on the futures. And I'll just have limit orders out there waiting and probably maybe 2 or 3 contracts on both sides just so I can get a piece of the action. We'll have to wait and see how it all pans out because obviously if things are moving very quickly, you stand to get whipsawed and take some significant losses. All right, let me real quickly go back through here. 100% guarantee the market will move. Yep, there you go. Buy at the money put and a call or spreads in both directions. That's another strategy you could do. Absolutely. I think that at the end of the day, the rate of return on that probably won't be as good as the rate of return that you would get if you really got to short it at an extreme and buy at an extreme. However, my strategy in that case is much more risky than what Tom is talking about, right? Just go long on one, go short on another, and basically just capitalize on the difference. No, it's already factored in. I believe it's factored in. I totally believe it's factored in. And you guys know I've been looking at I always look at this page here, which is the CME Fed Funds Futures, and you'll see right now a 99.8% chance that we're seeing 50 basis points. So everybody is saying, yes, this is what it's going to be. And mind you, when I look at this data here, this is not me. I'm not buying Fed Funds Futures. These are institutions. These are big firms hedging and betting that this is where it's going to be. So if the big money's there, and again, big money has way more information than you and me. I'm not having lunch with Jerome Powell, and I don't know any members personally of the FOMC. However, these futures traders probably do. They have ins, they have connections. So I feel comfortable in saying that you got a 99.8% chance of Fed funds 50 basis point increase tomorrow. Now, do we get a shock 75? I mentioned this yesterday. I don't believe so. I think you have to let the market slowly build into these rate increases. We started at 25 on our last meeting. We're going to have 50 at this one. And as you can see here, we are going to have right now what appears to be a 95% chance of a 75 basis point increase in June. Now, just so we can see what's been happening here with rates, you notice that we have been seeing them increase. So they're now, if you went back to April, all right, oh, heck, if you went back into, let's go to April 1st, there was a 6.5% chance that you'd see the Fed funds futures rate at 3%. Now, that's a 44% chance. There's also a 26% chance that we see it up at 3.25. Now, the big question I have for you is, Jerome Powell has said recently that he looks to get rates back to a normal level, yet didn't offer any insight into what that is. What is a normal level? You've heard the Fed funds talking about 2%. I'm curious for what you guys think out there while I read through some of these questions. Type in the chat, what do you think is what would be a normal rate given historical Fed funds futures rates? What's the normal rate that the Fed funds future should be at? That might give us some indication as to where Jerome Powell would like to take this thing. All right, and as you guys type that in, I'm going to read through. I gave up on trading the day before and the day of Fed announcements. I always lost. And Zanzibar, I'm bummed that happened to you, but I'm glad that you just say, I'm done with it, because there's too much risk in there. I encourage anybody who's new to just leave it alone. Just stay. That's why I like the popcorn trade of the day, right? I love the graphic. The graphic's like, you got this crazy stuff, don't worry about it. Just grab yourself some popcorn and enjoy it. The whole market is going to be a popcorn trade of the day tomorrow. Let me see. Last two meetings, it shot up. Yes. Okay, there we go. So what's that nominal level? They need some 75 basis point hikes, but it won't happen now. June, perhaps. I agree, Big Up. I don't think you're going to see it tomorrow. I would be shocked. If you did see it jump 75 basis points tomorrow, what that tells you is that the Fed is far more concerned about inflation and interest rates than we thought before. So what'll probably... My right shoulder is so much lower than my left. Looking at yourself on camera is a terrible thing. In order to have a 75 basis point increase at tomorrow's meeting, that means the Fed is going, This is way worse. We have to get this under control. I think that would create fear in the marketplace. Right now, you kind of go with the expectations and what's priced in. A 75 basis point increase would be a shocker for tomorrow, and I agree with you, Big Eb. I think that's going to be in June, not right now. So let's see. Normal, Randall says 0. Definitely not 0. I got 0.5%, 3.5%, 3, 5%, 2, 3. Doug says no idea. Tom says 5. Michael says 4.5. Joe Frank says 4.5 to 5.5 to 6.5. Yeah, historically, right around 5% is going to be the normal Fed funds futures, historically. Now, the challenge for us is, since 2009, all we know is 0, right? Let me see if I can bring up a chart of the Fed funds futures historical here. I think I can actually do it 2 ways. Number one, I'll bring it up here. Okay, so let me see how far back this lets me go. So if you look at this, this goes back just until 2000. And clearly something broke in 2009. Obviously, this was the financial crisis, and we were pretty much stuck at 0. We started to raise, which was important. We should have done that. And then all of a sudden, COVID came around like, oh, let's rip it back to 0. Well, if you notice that some of these rates were up over 6% back in 2000. And if I can go back further, let me just see if I can dig here and go a little bit back, go further back in the past. Let's go Fed funds rate. This is where I want TJ. TJ, help me to get all this data so I can bring it up for the viewers. I think this is actually from the Fed. Here we go. Okay, perfect. This goes all the way back into the 1950s. Now, granted, we were in a different world back in the 1950s. I think we'd all agree on that. But if I could draw a moving average on this chart, if I could draw on that one, you know, it does feel to me like 5%, which is where my cursor is at on the side here. That does seem to be rather a normal level. And notice where we are now. We are so far away from 5%. So I think that in the course of the next few years, we'll see this slowly drift up and get back towards that number. The concern, as I've said many times here on this show, is that as we raise that much, it's going to put constraints on the economy. It's going to make it much more difficult for businesses to put out these earnings that they've been having. And if you guys have been paying attention, there's been some pretty darn good earnings. Here's the stuff that came out today. Notice lots of beats, and I mean big beats. You had AMD beat on their earnings by 24%, BP beat by 36%, Pfizer just barely missed earnings, surprising. Starbucks as well. Apparently, we've been cutting back on our coffee intake, or maybe the cost of coffee's gone up too much to work on margins. Marathon Petroleum, also a huge beat by 33% on their earnings. And that's it. Skyworks had a slight beat as well. Teva was in line with expectations. But lately, you know, when we look at these earnings, guys, there's been a lot of beats, right? A lot of companies have been beating earnings handily. What else? Was there economic stuff? So to add to this, we've talked about other countries raising rates. And of course, when you look at Australia, you know, one of the very interesting things that happened last night is they spiked rates more than expected. I didn't look into what happened to Starbucks, but that would make sense. Here is the Australian dollar, AUDUSD on a 5-minute. And you can see right here when that announcement came out last night, right here, that huge spike, they were actually expected to raise it from 0.1% to 0.25, so 15 basis points. And then you actually had them come out at 35 basis points. So they raised by a quarter of a point in Australia, which was a little bit of a shock to the markets. The markets did not believe that was going to happen. But here you have an example of one central bank going higher than expectations with regards to rate increases. Now, granted, for them it was only 25 basis points. We're probably going to see a 50 basis point jump. But we also have another announcement coming out on Thursday with the British pound and their rate announcement. So it is now a battle for sure as to who's going to get off the bottom the quickest. New Zealand is actually, in my opinion, leading that one with how quickly they've been raising. And the one that stands out to me as the oblivious kid in the crowd is the European Union. They're not raising at all. They're stuck at 0. GD, as Karen asks, if the rate is baked in, why the whipsaw action? It is baked in, right? Markets are expecting a 50 basis point increase. Why the whipsaw? It could be a combination of many things. My internal belief system and how the financial markets work tells me that basically what happens is, you guys remember Black Friday, right? Out front of Walmart, what do you have? You have a bunch of people who are looking to capitalize on deals, and they're not even that great at deals. Folks, I can get the same deal the next day when there's no crowd, or the day after that, or I can shop around and probably find a better deal than Black Friday deal. So not that big of a deal. However, it is manufactured chaos, right? You create this event called Black Friday. You offer a couple of really interesting deals, and you bring in thousands of people. You've got security guards lined up at your front door, and all these people out front pushing on the door, trying to get it to open. And then what happens? They open that door. I mean, you have people before that door opens are elbowing and fist fighting in lines. They can get close to the door so they can get that microwave oven for $99 when it usually costs $110. Big friggin' deal. That door opens, and then what happens? It's chaos, right? People are brawling. I think there's a site called like What's Wrong with America, and it's like just nothing but Walmart Black Friday shopping fights. It's horrible. Anyway, the point is I feel like the financial markets almost do the same thing. They've created an event. So our Black Friday is FOMC meeting day. And it's all this anticipation of the quote-unquote deals that are happening as a result of those doors opening. Wherever the Fed announces is going to create chaos. So I think you have all these people jockeying for position, and they're very jittery. So you got a lot of institutions out there that are just feeding off of news, trying to anticipate, and they're swinging big volume. Now, right before that announcement, do you think that there's high volume or low volume? Right before that announcement comes out. Let's say, it comes out, let's assume at 11 a.m. Pacific time sharp. Do you think there's huge volume before that? It's usually really quiet. It's just you could hear the pin drop. I remember actually on the trading floor, we had a thing called LOS Squawk Box. Now, LOS Squawk Box was, we were a retail trading floor, right? So you have 180 people just in all these big rows on this floor in Southern California. We had LOS Squawk Box, which you could connect to one of two ways. One would be to put a headset on, and it was connected to these guys in Chicago. And they were apparently perched up above the pit, the S&P 500 futures pit, on the CME. And they would be reading hand signs. Babe, we got bid and quarter, bid and a half, bid and a quarter. Hey, here comes Goldman buying the half, buying. Here comes Morgan saying buying 3/4. And it would be confusing to anybody listening to it. But after a while, you start to develop an ear for what was going on that trading floor. And a lot of it was anticipation. People jumping the gun, trying to get in front of that announcement. If you try to go out with a big order before that 11 o'clock announcement, you're trading in a very illiquid pool. There's almost nobody there. So after 11 o'clock, if I trade, let's say 50 S&P contracts, I can unload that without having too much of an impact. But if I try to unload a 50 lot before that, what's going to happen? It's going to have a huge impact. So that's what I'm capitalizing on. I'm capitalizing on people before that announcement comes out, trying to jump the gun and anticipate. And that just creates this huge rip down, and it comes right back up. I'm not trying to make sense of it all. I really don't even care what the announcement is. I'll be honest. It is what it is. That's all I can say. But I'm capitalizing on fear. I'm capitalizing on the greed. And I'm going so far away from the market that if I don't get hit, no loss to me. But if I can catch something, it could be a huge winner based off of, it could be a huge winner or a loser. But if it's, or let's say I'm looking to buy 3% below the market, right? I'm looking to buy right around 4,050 on the S&P. If I manage to grab something at 4,050 on the S&P and it closes at 4,150, that's 100 points on a trade where I just capitalize on that catch. Most likely, it's not going to go down to 40.50 and just keep on plummeting. I mean, unless they raise like 2 points tomorrow, which that's not going to happen. Zanzibar says, traders are jumpy at rate announcement. Yep. And the move in the market, even though it's already known and baked in. Totally agree. That's why, I actually really like the question that came in from, was it Tim? Tim says, how do you typically trade a Fed announcement? The best thing I can say is stay out. For most people, just leave it alone. Wait till 11:15 Pacific time before you even think about getting in, because that's when the big volatility's out. And I know for most, they're like, well, that's where the action is. True. But if you're on the wrong side of some of that stuff, I'm sure many of you experienced it, it will blow your account. Gone. Doug Jeffers says, those tails are killers. Yep. They're the whipsaw ones, right? You end up with the big neck brace at the end of the day, and you're like, man, if I just held my position, I'd have done okay, but I got jigged out because of a huge move down, and then all of a sudden I went short and it ripped back against me, and you're like, how did this happen? Because you're chasing all over the place. Exactly, Michael. It's the popcorn market of the day, not the trade, the popcorn market of the day. I'm really getting my use out of this graphics from Tim. Thank you, Tim Sabick, for creating this one for me. I appreciate that. Let's see I wonder if Tesla stock value will start closing the gap with the real book value after the rate hikes are all set and done. Great question. I mean, we'll dovetail a little bit here just because you threw that question out there. And there's a lot of speculation right now on what's going to happen here with Tesla. So the expectation or the rumor on the street, I'm sure some of you guys have experienced it or heard it. See, not experienced, but heard it. There's rumors that Tesla's going to do another split. And interesting that he would decide to do the split now. You think he would have done the split announcement before he decided to sell his shares. There isn't nothing. I guess he's late on his SEC filing for Tesla, which is creating a lot of questions in the marketplace with regards to Tesla and Elon Musk. But, ideally, this thing keeps on trending up. I got that trend line in for a reason. It looks good. Even though it broke the trend line here, we could redraw it. Tesla still looks good from a trend perspective, although it is making these lower highs like we talked about with Don Fron the other day, which makes me a little concerned about it. But I don't trade Tesla. It's just too crazy and volatile for me. I like stuff that's calm and has a little bit more of a predictive move to it. Let's see. Markets are more or less pinned until Fed, so they just create volatility in order. Yes, I agree. I think that's a big factor to it. I'm going to go back here because there was a bunch of questions that came through earlier. If you go back to February 6th, 2018, my birthday, happy belated birthday. It shows exactly what you're saying with the ES had a 3 point. I got to go back to 2018 though. Holy cow, bring it way back there. Let's go to the SPX. Actually, let's go to the SPY. 2018, I don't remember the dates, but I mean, it is something that happens over and over and over and over again. So what did you say, February? February 6th. Is that this big long down day here? Yeah. That's it, a great example of it. I wish I could break it apart. It would just take me too long and torture you guys, but notice how long this bottoming tail is. I think that you're going to see something similar to this, although I don't believe you're going to have as big of a green candle. As I mentioned earlier, I think it's going to be a red candle. I think it'll have a long topping tail and a much bigger bottoming tail. But yes, this again is what I'm expecting. And if you ask me right here, Merlin, how are you going to trade this one? I would have done the same thing. I would have looked out here and said, okay, well, where do I see the price action issues? I see one way up here, which would have been nuts, but that's the big move way up there. And then, I mean, the only thing that's kind of close to this is down here at the bottom of this range, which it's not far enough away for me really to feel comfortable around it. It's only a 40-point drop. You could also maybe put a line down here and said, all right, I'm going to go where this thing consolidated and then moved up. So now I've got a couple points where I could potentially set limit orders. Not as good on the downside here, but didn't hit one on the up. But that's how I map it out. Does it work? Sometimes. No, absolutely. Cool. Thanks for that one, Michael. Should create a lot of opportunities for the week. Yeah, Dave. Not only for the week, I think it's setting the tone going forward. Right? Why is it setting the tone for the markets going forward? And I believe you're going to see a clearer picture from the Fed at 11:30 Pacific time, when Jerome Powell gets grilled as to why did you do 50? Was there an inclination for you to do 75 basis points? What's your thoughts on the normal rate? You're going to get all these questions, not necessarily answered, but a slight amount of clarity that the Fed has not given. So that will create some wild stuff. So here's a second question that came through from Alan. Which sectors will fall if the Fed raises tomorrow? Not really. I don't know. I mean, nobody here can say which ones will fall. Obviously, if the Fed raises, the historical numbers will tell you that financials should benefit because, of course, now they can make more spread on their loans that they are creating to their customers. So, in theory, financials, let me go here, might benefit tomorrow from a rate increase. But the question is it priced in? And what on earth has been going on with financials anyway, right? We've been expecting rates to increase, yet financials have been taking a dive here. I'm not exactly sure why that is, but I'm just going off of historical norms. Historical norms say that financial firms do better when you have a high rate environment, so that should benefit them. But personally, I think the more we see rates increase, the more you'll see every one of these, including energy, real estate, building materials, industrials, utilities, healthcare, technology, you'll see them all drift down if this market starts to grow. Growth equities suffer with higher rates. So you're really looking at something like technology then, right? So if we start to see those rates spike up, growth is the biggest sector of growth in our markets is technology. So you're looking at the NASDAQ 100, you're looking at triple Qs, XLK, as far as taking the brunt of a hit tomorrow. And if you look at the indexes, let's compare the top 4, right? Number 1, let's start with the Dow Jones Industrial Average, which is the world's most widely watched index, which just blows my mind. But there you can see your Dow. Really nothing that exciting about the Dow. To me, it really just speaks volumes to the trend reversed, right? To me, in my opinion, this trend on the Dow has reversed, and now we are seeing things drift lower. So that's your Dow. Fine, it looks all right. Now you look at the S&P 500, right? The picture is a little bit different. Let me take these blue lines off. Let me get all these lines off here. Okay, so we are now down below that yellow box. Or sorry, we were down below the yellow box yesterday. And again, same picture. We're now making lower lows. We're making lower highs, although we had one little blip right here on the 30th of March. It went higher, which just barely. That one got me out of trades. It pissed me off. But it's starting to show some weakness. Now let's go to the Russell 2000, which was the strong one today, about 0.93. The Russell 2000 was sideways forever, then broke down, and now another sideways action. Okay? And then NASDAQ. So NASDAQ, from the perspective of market strength from these 4 we've looked at so far, looks the worst. Right? The lows seem to be much more exaggerated off its all-time highs. It did not make a new high here. It made a double top, which is a perfect shorting opportunity if you're trading that NASDAQ 100 or the futures. Now we're looking at this baseline down here, which was our target from before. Now, once that breaks, or if that breaks, you'll see some much bigger downside moves, but it'll be led by tech. And I think that goes right back to Big Eb. Growth equities suffer with higher interest rates. And yes, that would certainly have an impact on the NASDAQ 100 and technology. Commodities are supposed to increase in value also. Well, everything works until it doesn't. We've been looking at things like gold and silver. Silver's taken a really big gut punch over the past couple of weeks. And normally you would say, yes, commodities would be that safe haven, right? Typical textbooks in your economics degree or business degree says, oh, when markets go to hell in a handbasket, you go to gold, you buy gold. Well, really, gold doesn't look that great. It's still, from my perspective, from 2021 lows, yeah, it's in an uptrend, but recently it's had, a change of heart. This move we've seen over the past 2 weeks has just really not been great. And of course, you look at SLV, similar picture. Maybe even a little bit more dramatic. So it really feels like just massive consolidation going on here with these commodities. Now, why aren't they moving up? Well, the main reason is these are priced in US dollars. And the dollar has been absolutely screaming to the upside. I mean, screaming. I would scream right now, but I don't want the dogs to start barking and freaking out that I'm okay. But yeah, this dollar is screaming up, which makes it less attractive because that means anybody buying in gold and silver can't buy as much because it's quoted in dollars. So if you have someone from India wants to buy some gold, the price of their gold just jumped significantly. The cost to them. I mean, even if you look back here, 4.19% just in the last 5 days. That's crazy. That means 5 days ago, they could have bought roughly 4% more gold. Or you go back here to these lows from January, that's 10% in, let's say, less than 3 months. Pretty significant move up, in my opinion, that dollar index, which is part of the reason why I think you're seeing gold not outshine the markets like it should be or historically does. Amazon, Google, Nvidia still with a little room down. Well, I think that there's a potential for a lot of room down on some of these. Netflix, I don't know about. Oh, you said Nvidia. Sorry. Let me start with Netflix because that one's just been great. I love this one. I just love the fact that Jim Cramer told everyone to buy it, and he refuses to admit that he totally screwed up on that one. Down 68% from where he issued that call, and that's in 79 bars. Oh, I feel bad for the grandma that went all in on Netflix off of Jim Cramer. Buy. He's so perfect. All right, Amazon. Here's your Amazon move down. Obviously, significant drop from 3,400 down to below 2,400. So a $1,000 drop. It's over 30% in just a very short period of time. A lot of people are going to be looking at this going, value play for Amazon? Is it worth buying down here at a 30% discount? I think if you have a long-term perspective on Amazon, sure. But could it go lower? Absolutely. You have it's a really tiny little zone right here. I like stuff like this. I like where it rallies up, hesitates for a second, and then rips up more. So there's a demand zone right around 2040 that I like on Amazon. Will it get down there? I don't know. I do not own any Amazon right now. But if it got down to 2040 down here, I might buy a little bit, buy some calls on it, or maybe even sell some puts right now to get myself in that position. but Amazon will split soon. And if they do, Big Eb, this thing's going to skyrocket. So I think you're right. I think at some point you're going to see Amazon make a split announcement. Still waiting on that one. But when they do, it should be a goodie. Let's go Google. All right, so same thing with Google. All right, another huge sell-off for Google. And again, yes, there are some huge gaps and unfilled ones. You know, Google has a great gap that goes all the way back to 1960. Not the year, but the price. $1,960, which is, you know, that's $400 away from current price. Well, that's a very logical target. I would probably look to buy it just before, right around 2000, as it approaches this consolidation from the gap up here in 2021. Not bad. What else did you put in there? You get Amazon and NVIDIA. Yeah, NVIDIA, pretty ugly drop. It's down almost 50% off of its highs. It's very close to 50%. You know, longer term, I think these two, Amazon and NVIDIA, are long-term plays that are great to hold in your portfolio. I think NVIDIA is dominating that kind of video card segment, which of course is not just for mining, it's for gaming, and we're moving more and more and more into, yes, June. Oh, wasn't 4th? Was it 4th? I remember, yeah. What's shocking about that is they made the announcement and it did not do what they're supposed to do. Every time somebody makes an announcement that they're splitting, you get a big surge. Except what's gone on with Amazon, which may be a testament to the overwhelming power of the markets. Let me just real quickly see the exact date they did this. It was March 9th. So let's go March 9th. It probably is right back here. Yeah, right at the dead low here. So I'll put a vertical line when they made the announcement. And you did get a rally up. Here's your March 9th. So you did get a really nice pop up. You know, this actually might not be a bad buy. I hate to say it. It's risky because you're going counter trend. But buying Amazon, knowing that split's going to happen, you'll probably get more people buying back in Amazon once they make more of a deal about that split. So kind of line up with maybe 12K in the NASDAQ. We can check that out, but yeah. 20 to 1. That'd be great. Amazon's only going to be $100 a share. $130 a share for Amazon. Still seems expensive. All right. What else did I have? Alan had which sectors will fall if the Fed raises tomorrow. Don't know. I'm not going to try to play that game. I'll just kind of go with whatever the market gives me. I'm going to play the broad indexes. The S&P will probably be my main focus for tomorrow. Just have this feeling we'll get an insane pump when those big tech stocks hit demand. I think so too. I think there's a lot. I think you're going to get one last gasp of value play. See what's happened every time we have these drops. It's buy the dip. And you hear so many people out there, just buy the dip, BTFD, right? Buy the freaking dip. That's pretty much the mindset now. But at some point, you won't have anything left to buy the dip. And I'm not referencing you. I'm talking about institutions. So they're trying to buy more as this market drops because we've been in this epic uptrend. But at a certain point, you'll buy that dip. It rallies a little bit and then makes a new low. And you're like, hey, should we buy this dip? And they go, we just bought. We're all in. And then what happens? If that keeps dropping, you're going to get forced to liquidate your positions. So if the markets do grind down, that could force a lot of these people who've been buying these dips out, which creates flash crashes, which creates those systemic moves where somebody unloads a big block of shares, triggers the algos, those algos start to sell, and all of a sudden you get big down moves. So I can't wait. Bring it on. Show me those algorithmic panic flash crashes. Thoughts on Activision? Ooh, milagro. E bon tequila. Let's see. Activision, ATVI. Oh, wow. This is actually called an island reversal. I haven't seen one like that in a long time. This is a very strange pattern, which makes me not very comfortable trading it. Just being honest with you, Milagro. When you have this big gap down, it forms this, they'll call it an island, and then it ripped all the way back up and gaps. That's a very strange chart. And I look at the long term here, you still are in a predominant uptrend. And if I went to a weekly here and drew trends across those lows, you would see your trend line, although it's aggressive. Looks like it runs right. Yeah, that's one. You could modify, and again, torch your chart long enough will tell you whatever you want to hear. But you got a couple different lines there. So all in all, the trend is still up. This weird fluctuations and gaps kind of, I'd have to dig deeper because this concerns me. You shouldn't normally get a gap like this and a gap the other way. Probably bad earnings, which you can see here was an earnings. And this second one was not an earnings announcement. It was something else that caused this thing to spike up here. So does it fill this gap? I don't know. I don't know enough about Activision. The trend is still up, so I'd be looking to buy on pullbacks, maybe if it did close this gap right around 65 bucks. NB, how future and equity markets connect, SPY driving or ES? ES. ES is always driving. It's the futures. It's built into the name. It's the futures product. So they're forecasting out, right? If I go to ESZ22, I'm trading December's prices, and that's the expectation of what price of the S&P will be in December. There are all these different futures products, but again, it's the futures. They're anticipating where the markets go. If we see a sharp spike in the December futures contract, what's going to happen to SPY right now? It's going to start to move up because the expectation is that it'll be higher in December. So the is it being bought out by Microsoft? I did not hear that one. But again, I can't follow everything. I didn't hear about that. It'd be cool if it did. Because Activision or Microsoft will have Minecraft. If they have Activision and Metaverse stuff, then they could be a much more of a contender or player in that Metaverse space. Any hope for cryptocurrencies to break the correlation with the indexes before my portfolio goes into double-digit red numbers? Oh, sorry, Joe. No. I don't think so. I think when you look at this market, you're looking at very, very tight correlations to the equity indexes. Plus, there's something that we covered. I'm not going to go in depth in it here because I think that's something that should be for my group. But there is a historical pattern that's rather unique in the cryptocurrency markets. It generally runs in a 4-year cycle. And what that means, if this 4-year cycle is in fact true, it means that you're probably looking at significant down moves in crypto for the next few months, probably 6 months or 9 months, based off of that historical pattern. Now, after that 6 to 9 months, it levels out, and then all of a sudden things start to drift back up, and then you get this sonic boom near the end of that 4 years. But unfortunately, that would put us right around 2025 before we get that nice big curl up. So I think cryptos, unfortunately, are going to be drifting down here for a while. So those double-digit losses could be substantial. So plan accordingly. Today was an ugly day. You saw some double-digit moves down here. Render coin, which is actually one I will be picking some up. If it keeps on dropping, Render is an interesting one used to make movies and render films and video files. Pretty cool. Some of the positive ones out there. You have Algorand. You've got CRO, which has been an absolute bloodbath lately. So this doesn't make calling out a 4.6% winner when it's down like 50% in the past couple months is not really anything exciting. But there you go. Smash that like button. I'm gonna have to check out the. Thanks, Tom. I'll check that one out. I didn't know that Activision was going to get bought by Microsoft. That would be obviously very big news, which certainly would have caused that big pop to the upside. The question is, what happens there? If you look at something like Activision, okay, Microsoft buys Activision. Okay, fine. If they buy Activision, how do you think it's going to do? How will Activision do if Microsoft buys it? In all the years that I have been a trader, it seems like when Microsoft does something, they don't do a very good job of it. It sounds horrible, but think of like when they had the iPods, right? You had the little MP3 players. Those are all the rage for a while, and Microsoft came out with one was called Zune, and that was an absolute failure. And they've come out with product after product after product that just seems to fail miserably. Now, Activision, obviously, in my opinion, is I call it the digital drug dealer. If you ever play World of Warcraft, you know what I mean. Once you play that thing, you're addicted to it. Is Microsoft going to continue on the glory days here of Activision, or do they do it their kiss of death on some products and just kind of, I don't know, this thing flounders around and doesn't perform as well as it did before? Not sure. Don't know. I probably will just stay away from it. I don't own any Activision. I've traded it a bit in the past, but not interested in holding that one long term. CRO rug pulled their staking rewards. Yep. Yeah, they backtracked today. Yeah. So they had all these, and this is what you're going to see in a lot of different crypto companies. They're offering insane perks to get you to buy into something, to get you to subscribe to something, to deposit your capital there, and then after they get enough people in, they pull those rewards away. We're seeing this happen in a lot of different ones. Right now in the CIO, we currently cover 19 different crypto exchanges and products that earn yield, where you could deposit your cryptocurrencies and earn 5, 10, 15% yield. What they're doing is they are across the board, the vast majority are slashing the rates that they're paying you right now. Now, obviously part of what I'm focusing on is where can I move my capital. So I am moving stuff around right now to capitalize on those better rates. But Crypto.com has kind of shot themselves twice in a month because they cut their rates significantly. They offered a stupid 2-tiered system, and now they're messing with their credit card their credit card and rewards function there, which create a lot of anger. MGI for NJ, sure. Uh-oh, my voice is going out. So here's MGI on a daily. MoneyGram, oh, careful. That looks like this gap wants to fill. You had this big gap up. It stayed sideways for a long time, and now all of a sudden it's starting to break down. Would not surprise me to see this thing come all the way back down to $9 and fill that gap. Trend-wise, I mean, it was on a nice uptrend, but a lot of volatility. You have these big gaps up. So it looks like an exhaustion gap, and then it started to fill it. So once it does that, most likely it's going to keep on drifting down here. Doesn't look too good. Microsoft destroyed several products with Office, Lotus. Yep, WordPress. Yep. They did make good on some. Okay, they, when they bottle those, they migrated them into one. So there are some things that they've done well with. Of course, there's a lot of people that would look and say Microsoft Office has tons of flaws. Let's go with some other service, and there are some other ones out there. But it seems like a lot of things they've touched have just been a mess. $69 billion for Activision. Whew. Wow, crazy. All right, let me real quickly show you some of the numbers coming out for tomorrow, just so I can wrap things up here before getting too long-winded on another 47-minute show. CVS reports earnings tomorrow. Now, I'll read the before market open one, which is just CVS, and then everything is going to be after market, at least the exciting stuff. You've got Twilo, Turtle Beach, Chesapeake Energy, which of course is one of the natural gas producers, which has been wild. You have Energy Transfer Partners as well as Etsy reporting earnings tomorrow. And then on the economic announcement front, this is what we've got cooking. There's a lot going on. If you notice at the top, there's a ton going on for the euro. So if you are trading that euro market or trading the euro currency, you do have a lot of announcements which could create some volatility, and given how hard and aggressive the euro has been falling against the dollar, there might potentially be some bounces here. You have a lot of trade balance numbers, services, manufacturing, and PMI numbers coming out for pretty much all EU. You got German, Italy, France, Spain, just a bunch of great data. Bill Addis won't be tomorrow. Bill Addis can be on Thursday, Big M. Let's see. And then down here near the bottom, this is where it gets important for us. Right here at 8:15 in the morning, this is Pacific time. So as the market is already open, you will get your ADP non-farm employment change, which is key. They're expecting to see the number of jobs decline significantly. That's the expectation anyway at this moment. And then we have final services PMI, ISM services PMI, crude oil inventories, and then the big daddy at 2 p.m. So I have my times wrong. This is 2 p.m. Eastern Standard Time, so I apologize. ADP non-farm employment changes is before market open. FOMC statement is at 2 p.m., which is 11 o'clock Pacific, and at 2:30 Eastern Time, which is 11:30 Pacific, you have the FOMC press conference, which I'm a geek. I like watching that regularly. I sit there and watch every minute of that interview just to see what Powell has to say. Let's see, NB. Can you suggest some the provider who sells some futures asset signals? I'm not quite sure I understand that, NB. Are you looking for someone to give you like signals on to trade futures? I would just say learn how to trade and don't rely on anybody else's signals. Learn just what signals to look for. Start studying your indicators. You could be looking at Bollinger's, MACD, stochastics. All these things are helpful. I'm actually going to be building a whole series of them for Online Trading Academy, which we'll put on our YouTube channel, on how to use all these quote-unquote indicators, and then kind of the optimal way to use those using things like supply and demand and market timing principles. But I'm probably not going to recommend anybody to give you signals. Why? Why would you rely on someone to give you signals? Learn how to read those signals and do it yourself, right? I think that's the better way. One thing that I see all too often in this industry is everybody's trying to sell something, right? They're all trying to sell you their magic secret sauce. I picked the greatest levels ever. Oh, my track record's incredible. Well, a lot of times they're pulling fake numbers. They're pulling things from a simulated account. So I wouldn't trust someone's numbers. Trust your own analysis of what an indicator is telling you, what the market is telling you, what that stock is telling you, what the futures is telling you, and then make your opinion from that. Generally, if somebody else is selling you a stock pick or some indicator service, they're just concerned with making money. So as long as they keep you around and let you have 1 or 2 winning trades a month, they can gloat about those ones. You don't need them. What else we have? In the words of Jerome Powell, we'll leave it to the historians to decide if what we do is a good thing. Yeah, right. Well, who knows? Who knows? All right. I think that's going to do it for me, everybody. Yeah, I had one. That was it for the questions I had come in. I went to your earnings, did economic calendar. That shall probably do it for the show for today. Now, tomorrow I got no guest. I'm going to do a show solo tomorrow. Bill Addis is on Thursday when we'll talk about these I-bonds, which has been very interesting to think you can buy a bond that's going to be 9%. Pretty interesting stuff. So it was interesting. I had a call with Bill, and he's like, nobody is talking about this. It got swept under the rug, and it's really kind of a monumental thing for I-bonds. So we'll talk about that on Thursday's show. But tomorrow, we'll be looking at this. We'll be looking at our markets. There's your euro. We'll be looking at the impacts of the FOMC announcement on that. We'll look at crude oil. We'll be looking at gold. We'll look at S&P. Lots of action for tomorrow. Yes, get your popcorn. Enjoy. We'll see how it all pans out tomorrow. Who knows? If it doesn't move a lot tomorrow morning, I won't make any trades. If it does, well, great. I'll have some trades on and hopefully have something to report to you guys in the afternoon. All right, that's going to do it for me. If you guys have comments, questions, feedback, put them down below the YouTube video. Just go ahead and type in whatever you want there, and you can also email me stuff at TraderMerlin@gmail.com. Until then, happy trading, everybody. I will see you all tomorrow. Take care.